this might play up very well, Nikunjan Aisha, from a trade perspective for IT and pharma. But we still have to monitor how much more downside there is to the currency, because add to rising oil prices, it's really bad news for importers and for our import bill.
Yeah. But the only solace is, like we were discussing yesterday as well, when it made another 19-month fresh low, that the decline has not really been knee-jerk. It's been very gradual at that. And this time around, you've not really seen central bank intervention. Otherwise, you always see the RBI come in, try and resurrect the situation. The central bank as well has let the rupee take its due course.
Aisha, the premise at the beginning of the year was that dollar will weaken and emerging market currencies would strengthen. So on that account, there's a departure. But the selling in rupee is just not because of local factors, it is very global. It's an emerging market effect which I think is clearly visible for Indian rupee per se. So which is what we must recognize and which is what we must acknowledge. Shalin Shah joins us, economist or senior India economist with Capital Economics. Shalin, good morning. Thank you for joining us. It's a new print of, or it's a new low on the Indian currency. Is this an indication that the macros which have worsened, they will worsen further, and that's making market nervous, or we should not panic? And do you think the decline actually is in line with what's happening to other emerging market currencies?
Yes, I think it's more of your second point rather than the first. We have to look at the weakness of the INR against the dollar recently in the context of what's happened more generally in emerging markets. Emerging market assets have come under pressure, and the rupee hasn't been spared this. And really, the fact that it's fallen to a record low, I don't think this is anything to panic about. I mean, when we're comparing it to what happened, for instance, in 2013, the decline or the depreciation in the rupee has been much more gradual. The macro picture is, I would say, far stronger now than it was in 2013 as well. FX reserves are much higher. The current account deficit is much smaller. The RBI, if it does wish to intervene in the FX markets, as it has been doing over the past few weeks, is doing so from a position of relative strength, I would argue. So the fact that it has weakened to a record low, I don't think that this is any reason to panic as such. And actually, if we kind of look ahead, the precedent really is that currencies can often bounce back fairly significantly. So we actually do think that there might be some further near-term weakness, but over the next kind of 6 to 9 months, there is a possibility of a bounce back in the rupee, especially if domestic monetary policy is tightened more aggressively than markets anticipate, and if oil prices fall back as well.
Before that, rebound comes in, how worse could it get? Because, already on the street, much like crude, people are talking about some levels like even 70 this morning. Do you think we could be headed in that direction pretty soon? Because it's not really far away. We're already at 68.86.
Yeah, possibly. I guess sentiment will probably come into play here. The fact that it has reached a record low might unnerve investors a little bit further. But again, I mean, I think the big picture really is that this isn't anything to panic about. And if we are, if we're right in thinking that oil prices will fall back over the next kind of 6 to 9 months as new supply comes online, then that should actually help to support the rupee against the dollar. And again, more generally, the big point really is that most emerging market currencies have sold off against the dollar. So actually, in trade-weighted terms, the weakness hasn't been as severe as suggested by the moves against the dollar.